Right, good morning and welcome. My name is Bernard Boshoff. I am an investment specialist with Discovery Invest, and I'm here to take you through a simple internal rate of return calculator that one of our actuaries built for us. Just basically, this calculator is a calculator that I use daily to basically do my job. And I started sharing this calculator with a couple of people in distribution. And if you see value in this calculator and you do not have a copy of this calculator, kindly just drop me an email or give me a phone call and I will see to it that I send a copy of this calculator. So basically, what is it? How does it work? This calculator is able to solve for complex equations around performance, and it actually helps you model a lot of really interesting things. So let's look at it. What if your client wanted to be a millionaire after 5 years? And let's assume a 10% growth in the portfolio and a 10% annual contribution increase. You click this blue button here, it says calculate recurring contribution required, and lo and behold, the calculator will tell you that your investor needs to put away today 10,806 Rand and 72 cents, growing at 10% per annum, assuming a 10% return net of cost. If you want to model cost into this, you would just obviously go with a little equals function in Excel. So you go, well, we're assuming 10% minus, let's say, 0.75% cost. Right, now let's model the contribution required. Okay, it's now going to be closer to 11,000 Rand. Great. So that's how to do that calculation. If your client says to you, well, look, 11,000 Rand a month is a little bit higher, then you can say to your client, well, let's just push it out 10 years, and now you only have to contribute 3,355 Rand. What if the fund doesn't do 10%? Well, then you say to your client, okay, well, then we assume 8%. What do we need to? 3,600. So why don't we agree that we start on 3,700? Likelihood of you being a millionaire after 10 years is quite high based off of the calculations that we basically put forward here. Great, so that's one function of the tool. I'm just going to sort of erase all the data, and I'm going to now show you a little bit more of a high level function what I use the tool for. So to give you an idea, we're going to say to a client, we'll say to the client, look, how much money do you need, or do you feel you need in retirement to basically maintain your living standards? Well, client as well, I'm earning between 40 and 60,000 Rand a month. Currently, I assume I'd need 40,000 Rand. So you'd go here to the recurring contribution cell and you'd say minus 40,000, okay, because every month we're going to be withdrawing 40,000 Rand from the kitty. We also want this income to grow by 6%. Okay, let's just say 6%, or inflation, or as close to inflation as we can get it. We're going to assume in retirement that we're going to be able to give you 8.5% return, okay, and we want to see how long it's basically going to take for this value to reach zero in the next 25 years. So here we're assuming that the client has 25 years to live. We're going to come up here and we're going to click on the calculate lump sum required, and the calculator is going to do some equations and say, well, you actually need 8,865,319 Rand and 40 cents to basically get this thing off the ground. And then you say, okay, well, that's all fine and well. That's today's value. What is this 8.8 million Rand worth in, let's say you're going to retire in 30 years' time. So we go to 30 years, we say, what is this money worth in 30 years? We're going to make an assumed growth of 6% or inflation, 0 ACRs, and 0 recurring contribution increases. We're going to go down here to the bottom and we're going to see, okay, it's actually worth 50,917,883 Rand and 73 cents. So we're going to copy that by holding down Control C. We're going to copy that value. And normally what I do is I normally paste it up here in the J1 cell, so this cell up here, and I go Control V to paste it. You'll see it immediately disappears. You just come here to this little control button, you click that, and you go down to paste values, and lo and behold, the number comes back. Another thing that you guys that are sort of running analog can do is you can just write down the number on a piece of paper, come across here to the lump sum contribution key, and you can literally just write that in. So 5091 788.73. Basically, that is our lump sum in retirement that we have. We, again, going to assume an 8.5% growth over 25 years, assuming the 6% inflation. And very importantly, end value is zero. Calculate the recurring contribution that we're going to be able to extract as an income. And you'll be able to say to your client, well, in retirement, based on these figures, we are looking at a monthly income requirement for you, inflation adjusted, 40,000 Rand. It's going to be 230,000 odd. Client's going to be quite shocked at that. So the next question ideally would be, well, how are we actually gonna get to that figure? So what you would do is you'd literally just copy this number here by going Control X or cutting it, pasting it here into the end value section, okay, and then making that zero, assuming 10% annual increases and a 10% return in a balanced fund, and you're gonna and it's over 30 years or after 30 years. We're now going to calculate the recurring contribution required, and then you can sort of say to your client, well, you now need to save around 8,500 if we just round up. 8,500 Rand a month starting today. Assuming these things after 30 years, you're going to basically be sitting with enough cash to sustain yourself on your current salary, inflation adjusted, for 25 years. So really, really nice tool to forecast this stuff out. Obviously, you know, if you can model it, you can say, well, you know, what if, because we're investing in the long term, we are able to actually do about 12.5% return, then actually you only require 6,000 Rand if we round up. Or, you know, if things aren't going to go that well and you're only going to get 8%, which is not really likely, but then your recurring contribution is going to be 11,000 Rand. So yeah, very nice tool to model this sort of problem. Another nice thing I use it for is tax-free savings. So we all know that tax-free savings are this wonderful gift from the Treasury, about the only good thing they've done in recent history. So yeah, with that said, let's work out how I use it. So currently, the maximum that you can sort of put away is 2,750 Rand a month. You can't increase this on an annual basis because you would have hit 33,000 Rand contribution ceiling. Here, I can use something like our Discovery Worldwide Best Ideas Fund. So I'm going to assume a 15% growth rate because the fund is really capable, being a worldwide multi-asset flexible fund, really capable of sort of hitting these upper 15s, 20s on an annualized basis. And I'm sort of going to put the term at 15 years and 4 months. Okay, it's around about how long it's going to take. The cool thing is you can also click on this little show months button, and we can actually add up all these contributions over the years, and it will sort of tell us, okay, I've got 500,000. All right, okay, I'm a little bit over. All right, but if you sort of see in the bottom corner here, 506,000. So I'm a little bit over, so we'll just make that 2 months, okay? So basically the end value then, okay, we come down to the end value. We sort of take this end value, Control C, at 1.7, basically what my money is going to be worth at that point in time. I'm going to paste it here in the J cell. Just run a quick values paste. I'm now going to copy that. I'm going to put it in here. Oh, whoops. You can't actually do it like that. You actually, just undo that. You actually have to paste it up here in the formulas tab. So I paste it up there, pasting up there, and then I need to make recurring contribution 0. We'll leave that the same. We're then going to run this investment for another 10 years after we've put our full 500,000 out there, sort of in the same return profile, and the calculator will tell us, okay, cool, at that point, after 25 years in total that you've been investing, okay, you're now going to be sitting on a very nice sum of tax-free cash, 7 million in tax-free money, okay, so we can literally take that number and we can copy that and we can put it here in the lump sum, right? And then we can do the annuity calculation. So I can say, well, assuming let's now say also 15% return, because you're not going to really change the fund at all if you're going to be doing this type of thing. Okay, we're going to say a 6% increase. We want it to equal 0 after 25 years. Calculate what I can basically draw out of this. Okay, well, I can take a monthly withdrawal of 56,255 Rand tax-free out of my tax-free savings account, which I can cross-subsidize to my income requirement. So yeah, very nice. And then the client says, well, 15 is a bit unrealistic. Well, then you just change the number and you can say to the client, well, actually, it's going to be between 36 and 55. So yes, I hope this has been helpful. Again, if you don't have a copy of this calculator and you want a copy, please just drop me an email or get in touch with me on LinkedIn or what have you, and I'll be more than happy to send one over. Great. Hope you're well, and we'll see you again soon. Any questions? I'm happy to take questions as well. Bye-bye.